Ever wonder what's the buzz about Bitcoin? Welcome to the intriguing universe of cryptocurrency, where Bitcoin plays a leading role. Imagine a digital currency, decentralized and free from governmental control. That's Bitcoin for you. Created by an enigmatic entity named Satoshi Nakamoto, Bitcoin is more than just a currency, it's a new type of digital asset. As we journey through this world, we'll decipher the mechanics behind Bitcoin's operation. So, let's dive into the world of Bitcoin and understand how it works. So, how exactly does Bitcoin function? Now that's a question worth delving into. At the core of Bitcoin's functionality is blockchain technology. Picture a chain of blocks, where each block is a record of transactions. This chain is decentralized, meaning it's not controlled by a single entity, but is distributed across a network of computers or nodes. Each time a Bitcoin transaction occurs, it's recorded in a block. But how do we ensure transactions are legitimate? Well, that's where the magic of cryptography comes in. Each transaction is encrypted and linked to the previous one, forming a chain of blocks, hence the name blockchain. If anyone tries to alter a transaction, it would affect all subsequent blocks, making fraud easily detectable. This is how blockchain ensures security and transparency. So, to wrap it up, Bitcoin operates on a decentralized network, using blockchain technology to record and secure transactions. Bitcoin's power lies in this transparent and secure way of making transactions. Bitcoin didn't just emerge overnight. Let's take a quick look at its history. The concept of Bitcoin was born in 2008 when an anonymous entity known as Satoshi Nakamoto published a white paper titled Bitcoin, a peer-to-peer electronic cash system. The first block of the Bitcoin blockchain, known as the Genesis block, was mined by Satoshi himself in January 2009. Fast forward to 2010, the first known commercial transaction with Bitcoin occurred when a programmer bought 2 pizzas for 10,000 Bitcoins. Can you imagine that? That's worth hundreds of millions of dollars today. Over the years, Bitcoin has seen dramatic price swings, reaching an all-time high in late 2017, only to crash and then rise again. It's been a roller coaster ride, but one thing is certain: Bitcoin has left an indelible mark on the financial world. From being worth just a few cents to thousands of dollars, Bitcoin has certainly come a long way. Have you heard about Bitcoin mining and wondered what it is? Well, let's break it down. Bitcoin mining is essentially the process of creating new Bitcoins and validating Bitcoin transactions. It's like the heartbeat that keeps the Bitcoin network alive and thriving. Picture a group of miners, not in the traditional sense, but tech-savvy individuals or entities using high-powered computers to solve complex mathematical problems. These problems are, in fact, transactions made by people all over the world. By solving these problems, miners validate transactions and ensure the integrity of the Bitcoin network. But the question arises, why would anyone spend their resources to do this? Here's where the concept of the proof of work comes in. When miners solve these problems, they prove their work and are rewarded with new Bitcoins. It's a win-win, really. Miners get to earn Bitcoins while also helping to maintain the network's security and reliability. Bitcoin mining, though complex, plays a crucial role in maintaining the Bitcoin network. Now that you understand Bitcoin, how do you manage it? Well, let's dive into the world of Bitcoin wallets and trading. Bitcoin wallets are crucial for storing your Bitcoin. They can be divided into 2 main types: hot wallets and cold wallets. Hot wallets are online and connected to the internet, making them convenient for quick transactions. However, they're also more vulnerable to cyber threats. On the other hand, cold wallets are offline and are thus more secure. These are ideal for storing large amounts of Bitcoin that you don't intend to move frequently. Now, let's talk about trading. You can invest in or trade Bitcoin through exchanges, which are platforms where you can buy or sell Bitcoin in exchange for traditional currency or other cryptocurrencies. But remember, while the potential for profit is high, so too are the risks. Price volatility can lead to substantial losses, and exchanges themselves can be vulnerable to security breaches. Remember, trading Bitcoin can be risky, so always do your research. With digital currencies, security is paramount. Let's discuss this. The world of Bitcoin, like any other digital space, is not immune to security challenges. Threats like hacking and phishing scams are all too common. To mitigate these risks, the security of your private keys is crucial. These keys are like your digital signature, granting access to your Bitcoin, so keep them as confidential as your bank PIN. Now let's shift gears and talk about regulations. Bitcoin, being decentralized, doesn't answer to a central authority, but this doesn't mean it's a lawless landscape. Different countries have various stances on Bitcoin. Some embrace it, some regulate it, while others outright ban it. So, it's vital to stay informed about the legal and regulatory environment where you reside or plan to use Bitcoin. As with any investment, it's important to understand the risks and regulations. Where is Bitcoin heading? Let's explore its potential future. As we stand on the precipice of a new era, Bitcoin's future remains an intriguing mystery. The potential for Bitcoin is vast. With its decentralized nature, it could revolutionize financial systems, making transactions faster, cheaper, and more secure. However, Bitcoin's future is not without challenges. Scalability is one of the biggest issues facing Bitcoin. The Bitcoin network currently can handle only a limited number of transactions per second, which is a far cry from traditional financial systems. But with advancements like the Lightning Network, which is a second-layer solution for faster transactions, Bitcoin might overcome this hurdle. Another important factor is adoption. For Bitcoin to truly realize its potential, it needs to be widely accepted by businesses and individuals alike. We're already seeing a significant uptick in businesses accepting Bitcoin, and with the growth of Bitcoin ATMs, the trend seems to be moving in the right direction. On the flip side, some common misconceptions about Bitcoin need to be addressed. Contrary to popular belief, Bitcoin transactions are not completely anonymous, they are pseudonymous. Also, while Bitcoin has been associated with illegal activities in the past, it's worth noting that the majority of Bitcoin transactions today are entirely legal. Whether Bitcoin is the future of finance or not, it's certainly changing the way we think about money. Let's recap what we've learned about Bitcoin. It's a decentralized digital currency underpinned by blockchain technology with a rich history and a promising future. We've delved into how Bitcoin works, how it's mined, and how it's stored. We've also touched on the risks, security measures, and regulatory environment. As we continue to explore the world of cryptocurrencies, remember to like, subscribe, and share our content for more insights. Thank you for joining us in this exploration of Bitcoin. Stay tuned for more exciting content.